So the euro continues to extend declines, with the market recently breaking down to a fresh 9-year low at 1728 on Wednesday. Deeper setbacks are now expected towards the 2005 base, which comes in at 1640 below. Ultimately, any rally should be very well capped below the 50-day moving average, with only a break back above this moving average to compromise the bearish outlook. Still, daily studies are oversold, and there is risk over the coming sessions for some form of a bounce. But again, the 2005 base is the key support right now in focus, and this level is expected to be tested in the sessions ahead. Sterling dollar. Cable has managed to mount a nice little recovery after breaking to fresh 18-month lows at 150.35, but again, the downtrend remains firmly intact, and any rallies are viewed as corrective in favor of a lower top and fresh downside extension below 50.35 and towards the 2013 base at 148.15 further down. Dollar yen. Dollar yen has been in the process of correcting over the past several sessions, although the market is more classified as a bullish consolidation, ahead of what should be the next upside extension beyond the 7-year high that was set in December at 121.85. Ultimately, only back below 115.55, the low that we saw on the 16th of December, would compromise the bullish outlook. Euro Swiss. Euro Swiss price action is halted to a basic standstill, although the market is still looking to hover to stay supported above critical psychological barriers at 120. A break and close back above 2045 will be required to confirm basing, while inability to do so will keep the pressure on the downside with a potential breach of that critical 120 barrier. Aussie dollar. Aussie dollar has been consolidating in recent trade, with the market trading roughly between the recent lows that we saw at 80.35 about and recent resistance that comes in at 82.55. But ultimately, the market is locked within a downtrend, so any rallies are classified as corrective in favor of a lower top and fresh downside extension below 80 and towards the 75 area further down. Ultimately, only back above 85.41, the previous 2014 base, would compromise the bearish outlook. Dollar CAD. Dollar CAD is showing signs of a top into Thursday, with the market trying to correct from very overbought technical readings. But the overall trend continues to be quite bullish, and any setbacks in this market should be very well supported now by previous resistance turned support in the 16 to 1700 area. Kiwi dollar. Kiwi dollar remains confined to a consolidation within a broader downtrend, and ultimately this market is expected to break below the range support at 76.09 in favor of a fresh downside extension towards the 72 area. Only back above 80.35 would compromise the bearish outlook. S&P 500. The S&P 500 is showing signs of a major top and will need to break down below key support at 1968 to confirm such topping and open the door for further acceleration. Inability to break down below 1968, followed by a push back above 2070, would put the pressure back on the top side and open the door for an assault on the recent record highs from December, just shy of 2100. Gold. Gold has been impressively recovering over the past several weeks, out from 4-year lows at 11.31, with the market now close to testing key resistance at 12.56. A break and close above 12.56 would suggest that the market is now putting in a major base, while inability to do so will keep the more medium-term pressure on the downside.